Superannuation. There's obviously all your major super funds, Aussie Super, etc., Aware Super, and some of the others. But then there's private superannuation funds. Should a business owner bother with a super fund, or is there other way? Should they be putting their money elsewhere? What's the point of having your own super fund if it's just going to sit in your bank account?
Yeah, good question. I have a self-managed super fund myself, so I have a bit of a bias towards them. But the common tests of whether you'd have one in that example, unless you've got minimum maybe 250 to 300,000 to consider putting into a self-managed fund, then it's probably better just to leave it in a managed fund. The litmus test is typically the cost or fees in running the fund. Most industry funds or funds out there will charge somewhere between 1% to 2%. So the cost at least of running your own managed fund, a self-managed fund versus a managed fund, can get less as it grows. The biggest reason to have one, Ollie, would be just purely flexibility and your choice to invest in what you want to invest in. Now, it doesn't mean become a bank account. You can just spend on whatever you like. But there are rules around providing for your retirement, and there are certainly ATO and SIS rules, the federal government regulator for super funds. So, property, shares, you can buy Bitcoin, cryptocurrencies, those sort of things. Your deed has to allow that.
Yep.
But you just may want to have one just purely because you've got to have the time to look after your investments. So even though someone might have 300 to 500k plus, but they just don't have any time to do the administration, looking after the investments, then maybe it's not for them. Our business runs a financial planning arm. We have a number of wealthy clients who may use self-managed super to buy their own premises. That's probably the main, or second most common reason, other than their own choices and flexibility.
Right, and then lease that property back to their trading entity.
Yeah, that's one of the big great things that we see. There's only a few assets, or a couple of assets essentially, that you can either contribute to by way of business real property or listed investments. You can contribute into the fund. But a real common one is your business premises. You are allowed to rent your property back to your business at arm's length rates. A little bit of discretion, but with a commercial lease agreement in place, it's a great way to you pay rent to your own super fund and help fund your retirement.
Right.
If you're going to typically occupy your premises for a minimum 5 or 10 years, then you may as well buy it. But so that's a common one. But a big one is time, and that's if people just simply don't have the time, or literally, it's not a personal
time
bank
or
account.
Inclination. Really?
Time inclination is good.
And you got to, by the sounds of it, have a fair bit of money for it to be worth it, to override the costs of running the fund itself.
Yeah.
So what does it cost to run a self-managed super fund roughly per year? And I appreciate this is not advice.
Yeah, sure. So, and it can be a little bit of a how long is a piece of string. If you had one bank account, maybe a term deposit, and it's very little activity, as low as 2,000 to 2,500. The fund must be audited, so there's an audit fee. There are options in Australia now to have a full service where the accounting, audit, a whole lot is done from end to end, from as low as sort of $1,500 or as low a complete budget service. You get what you pay for, $1,000, including the audit. Typically, our funds for our business owners, where they might have a little bit of sophistication around the property or some shares or managed, they still might hold managed funds within them. They might range from 2.5 to 3.5, 4.5.
Right.
Larger funds with more complicated investments, limited recourse borrowing. You can buy your business premises and borrow money in a super fund. A lot of people don't realise that.
Okay.
You might pay a slightly higher interest rate, and they might have some lower loan to value ratios to be wary of, but it's still generally a good investment to buy your own premises in your super fund.
Okay.